Today, we'd like to welcome Ruth Irwin with On the Money to talk to us about financial statements. They really aren't as scary as you think. Is the balance sheet. Tell us why this is important.
Well, the balance sheet is going to be where you are right at that point in time. I think that investors and banks certainly look at the balance sheet, even over the profit and loss statement. You'll see in our example that the assets that you have, which your assets are things like checking accounts, they could be furniture and fixtures, they could be a building, a variety of things. They should equal your liabilities and the capital, also known as equity, in your business at that point in time. So your assets equal the liabilities plus the equity. If they don't, you're out of balance on your balance sheet.
You probably see that a few times, but let's
We
take a
never
look
see
at
that.
an example.
Well, this one's in balance though. So like I said on the last slide, the current assets, the things that your business owns is in that first piece of it. And those are the things, the current ones are things like your checking account. Your long-term assets might be your building. But you get a total of assets there, things your business owes. So that could be, and this is short-term debt. So it could be credit card debt that you have. It might be a line of credit that you have. That goes under current liabilities. A long-term debt might be a mortgage on your building. But then after you take your current liabilities and your long-term debt, you'll get your total liabilities. And if you take that away from your assets, what's left is going to be called your equity or your capital, as was mentioned on the prior slide. And then you're showing this one is in balance. The liabilities and equity do indeed equal the $71 million in total assets.
And you've said it before, you'll keep saying it again, but this is just a snapshot of one point in time. Why is that important for business owners to understand?
Well, this is really the health of your business, because investors, buyers of your business are going to look at this. It's like, okay, how much cash have you got on hand? How are you really running your business? You know, sometimes it may look like you're profitable on your income statement, but the reality is you're showing a lot of debt here under your liabilities. So it's really hard to understand your business if you don't have both of those statements. Now, one of the things we've just kind of summarized each category here. But under your equity, you're going to also include your net income. That's a piece of your equity. And that's going to tie back to your income statement and should match what's on your income statement.
I like the phrase you used earlier. You know, one of your clients said you were looking under her skirt. That's my opinion of the balance sheet. You're really taking a look under the cover of the car, under the skirt,
Under the hood.
whatever you want to say.
Yeah.